Hey everyone, welcome back to the channel. Uh, Tenet released their Q1 numbers this week, along with a conference call discussing the results. So here's my recap of what they reported and what kind of changes the company is going to see going forward. So they reported a total revenue of 34.7 million. This is 143% year over year growth from last Q1. Just EBITDA loss of 568,000 and net loss of 336 million. They also reported gross margins of 13.6%. It's an increase overall as well due to the Heartbeat platform generating 0.5 million worth of revenue in Q1. It came online just at the end of the year, they reported. And the oil and gas sector. They said that the oil and gas sector was the fastest growing segment of the company, but was still only a small portion of total revenue. And the clean tech pillar right now as well generated zero in revenue. They're anticipating that to start generating revenues come Q3. They released update guidance as well through their PowerPoint presentation. And, this has a few people divided on what they've come out with here. It goes hand in hand with definitely some of the headwinds that the company's been facing as far as uplisting and SEC, and then also COVID lockdowns in China and the delay in revenue to the Heartbeat platform. So what they've done here is they basically reduced guidance from 345 million for the year down to 210 million. And they also reduced forward guidance in 2023 and then gave us guidance for 2024. So this is the first time we've seen 2024 numbers. They have those at over $1 billion with adjusted EBITDA of 215 million. So these EBITDA numbers are much lower than what were in their original guidance numbers. And we'll get into that. So when they've changed their plan, I guess, in the last month, um, I think it's probably been in the works a little bit longer. They held guidance last Q1, but these things were probably in the talks, and in the earnings they kind of stated that as of 3 weeks ago, the original guidance numbers still held. So I think it's one of those things where they just made a final decision 3 weeks ago, and they just said, "Hey, look, we're going to send more money to the Canadian Business Hub, get that up and running, because this is the part of the business that they're most excited about and they most want to get online." They easily could have just kept sending more capital towards the Chinese part of their business and expanded on the supply chain and those revenues. However, it's not really where Johnson and the company wants to be. And as you read through the MD&A and you listen to the conference call, you really get a feeling of that. While it's not new, their plan in North America, they definitely had to make some adjustments over the last year with the issues that they've had, as well as macroeconomic problems. So getting into the EBITDA numbers that they reported of a loss of 568, this is substantially below what I was hoping out for, even though that their top line was higher than I thought it would be, because I was kind of basing my expectations off of numbers that they previously gave. Same with the net loss, because originally they were forecasting like a net gain this year of 50 million and I think 80 million in EBITDA. So basically why this is happening is they're not going to access as much capital this year as they originally planned on. And because of that, the capital that they are sending to Canada is basically just a net drain on the company. So originally, if China would have received more money, then they would have generated more revenues in China. And that would have also translated into higher EBITDA and higher margins and so on and so forth, right? So we kind of have to reframe our thinking of of what the company is going to be, and essentially kind of hit, I think, a reset button for our own expectations for those of us who've been with the company for a long time. I know over the last couple of quarters, I definitely have. This one especially, I believe, you know, there's a lot to unpack with Q4. There was even more to unpack with this one as far as Cubular and what the business is positioning itself as. So some would call it a business pivot. I would just say it's more of a renewed focus, and it is in line with what the company has been planning to do all along on the North American business hub to drive future growth. So the Chinese supply chain has always been a mean to the end. It's been a huge revenue generator for the company. Some of these verticals have good margins, but the point has always been to give them access to the business data. So management really wanted to stress that point that the global business hub is the future of the company, not the Chinese supply chain business. So it's not an abandonment of what they're doing. It's just a reiteration of what they want the future of the business to look like for the next few years. So when I look at these numbers, I still see a lot of Chinese revenue, and I still see the Chinese margins baked into here. I don't see a lot of NA in here. I think even though they wrote down here revenue forecast to exceed 1 billion by 2024 with operations in China, Canada, and the US, I think Canada and US will just be coming online come 2024. Next year, we'll see small revenues. They're still going to be doing things in Canada like servicing loans. Sorry, guys. Servicing loans and the core parts of their business, and being a little bit of a middleman for that. But it's not going to be any kind of rapid growth just between the revenue and the EBITDA numbers. They did say as well that they're planning to list the TSX in the next 1 to 3 months, with London shortly after. NASDAQ will come when it comes. Honestly, it could be any time. It could be 1 week from now. It could be 6 months from now. They're pretty tight-lipped on it. We could get a surprise, and we could be on there next month, right? Or it might even be next year. It is what it is. The Q&A section, they mostly touched on the Heartbeat platform, margin profiles, the capital raise, and Cubular. Heartbeat, they just iterated that was very important for revenues and margins, and a key element for service provided on the business hub in China. And it's a very important part to help business operate. Plus, it gives them great margins. Speaking of margins, they did include in their PowerPoint presentation these breakdowns, which is great to see just in print. They've kind of told us before, and we've seen it, but oil and gas, clean energy, insurance are going to be their top three, and it's going to be really exciting going forward what kind of margins they're going to get in the boosting their numbers in China. So, first capital raises, they weren't totally clear on what it was going to be. They were discussing internally still what instrument they're going to use, whether it's debenture, a debt instrument, or an equity raise. Basically, it's going to depend on share price and what they need as they need it. They're not concerned with burn rate. Apparently, as per the MDA, it states they have cash on hand for 12 months of operations. Plus, notably, they also manage positive cash flows from operations for the quarter of 1.5, of a few $100,000. They had positive cash flows from operations of 1.5 million and 1.2 million cash from finance activities. Then there was a drawdown for the loss in investing activities, but it was still a net cash, so it's pretty good considering that they have these different things going on with the business. They can still manage to run a cash positive quarter, especially that Canadian operations was a total cost of 4.6 million. Without the Canadian operations, they would have had a positive EBITDA of about 4 million adjusted EBITDA and a positive profit of 1 million. So, going forward, we'll probably be looking at Canadian operations being at least 5 million, 6 million, 7 million each quarter. Maybe by the end of the year, they're going to be doing 10, 12. we'll have to see what that comes. But I think their margins of the business in China should help offset that. Um, so Kubler, they talked a lot about this. The launch of the Canadian hub is very important to them, and they want everyone to see what the global network that they're trying to build. With the Chinese operations, it's hard to show what they're building. They mentioned the new website, which is up now. You can go have a look at it along with the presentation. But the presentation and the website is kind of what they put together to help us understand what they're trying to build going forward. And in NA they have this dashboard idea where small businesses can post messages and communicate with each other on platform, targeted advertising. They can't wait to launch it. I know Johnson's, I think, really excited about this. And the reception at the events they've been attending has been really positive. They mentioned, especially in restaurants, just how hard it is for restaurants to gain access to capital. And then also the financial institutions, right? Being able to provide a service to financial institutions alone to help them add small businesses to their books in a risk-free way is super important and really amazing for helping small businesses grow in Canada and then the US. So they're going to be ramping up the pre-registration campaign, and they will be looking to report on that later. And I think that overall. So one last thing I want to mention is their closing remarks. At the end of the Q&A, they mentioned it's been difficult for the last few months for sure. They were affected negatively in the markets and fundamentally, but they believe they have a strong plan to rebound from this. Ultimately, the changes that they plan on making will make them more profitable in the end. Plus, it'll help give more visibility to the business hub and the potential there. For some, the numbers may be disappointing short term, but they think it'll benefit them in the longer term down the line. And they promised that the website would be updated into the effect with their building, which it is. So they said, forget about really, we should forget about the last 12 months. We should look forward to what they're building, and we should think about, if I was a new investor looking at this company, do I like what I see? And the revenue growth is still strong. EBITDA could be better. However, with increasing margins, I think this is going to make it a little more attractive. They will get back to net profits. However, they're going to keep it slim because they're obviously going to want to advance on the North American side as quickly as possible. They stated in here that we might see the new revenue streams in 2022. However, I think that's just going to be a trickle compared to what it's going to be over the next 2-3 years. And really, we should be looking at 2024 to 2025 as far as the potential of this company now. I think they're still a strong company, and I look forward to seeing where they go from here. Okay, guys, thanks a lot for taking time to watch this. I hope I was able to consolidate it in a nice manner so everyone can kind of get the highlights. You are going to hear a lot of differing opinions. One thing I noticed is everyone seems to take away something different from these financial results. There's going to be some disagreements out there in the forums and the boards as far as the company's doing this or that. We're all valued for our opinion in the end. And so just take in what people are saying, process it, and come up with your own thoughts of where you think they're going to go and what kind of company they're going to be. At the end of the day, I've been at the company for a long time, 7+ years. So I know the strength of Johnson and the management team. I probably a little bit more trust in them than some other people who may have just joined, who bought at a little bit higher share price. It's a lot hard to stomach these low share prices, and a lot easier to doubt the business decisions of management when you're, down 50, 60, 80% on your investment. So yeah, my only suggestion to people like that is, do your research. If you feel like you find a better opportunity out in the market, then you have to go with your gut, and you have to make that decision for yourself. But for me, this is one of the best opportunities that I found on the small cap market for sure. So looking forward to what they come out with. Really looking forward to hopefully seeing Johnson do some interviews. Looking forward to hopefully you know some new awesome press releases and information on North American Hub. And check out the new website. Check out the investor presentation. There's a lot of good info in there, and I'll link them both down below. Thanks for listening.